Bitcoin started life in 2009, essentially worth zero. Earlier this year, the cryptocurrency surged to a high of over $40,000. It has shot up over 400% in the past year alone.
There's really two main drivers behind the big rally of Bitcoin that we have seen. First is really the continuous entry of institutional players, family offices, hedge funds, asset managers. Second, and very important, is the retail fear of missing out, FOMO. I mean, just to put things in perspective, only 5 years ago, in 2016, there were only 5 million people with an account at a crypto exchange. And last quarter, you had over 100 million people with accounts at a crypto exchange. And this is not even counting all the people who are able to buy now Bitcoin and cryptocurrencies using technology platforms like PayPal or Square.
Student and financial blogger Yun Heng first heard of Bitcoin back in 2017. But the lack of knowledge, along with fewer avenues to invest in cryptocurrencies, kept the 22-year-old on the sidelines.
I actually first heard about Bitcoin back in 2017, but I didn't find the courage to go in because I didn't understand like fluctuations or volatility back then. So and also there wasn't like a exchange for me to buy.
Since then, Yun Heng has taken the plunge into the world of cryptocurrencies.
My first Bitcoin investment, it was in August 2020. And within just a span of 5 months, actually the value of my Bitcoin investment actually almost doubled and hit nearly $6,000.
This Bitcoin vending machine company is seeing a surge in new investors.
Over the last few months, particularly the last few weeks, we saw a lot of new customers being onboarded. In the past, we have more seasoned or more user of the machine, and then right now, probably more than half are new customers.
One pull factor for Bitcoin is its scarcity.
Every 10 minutes, actually, you have 6.25 Bitcoin that are created. There's about 700 Bitcoin that are created a day. This is going to continue until the year 2140, where you'll hit the maximum of 21 million Bitcoin. And this is why I think this one of the mechanisms this happens is that every 4 years, the number of Bitcoin that are offered to miners every 10 minutes, it actually gets cut by half. According to one recent study in the United States, 2/3, 2 millennial out of 3, sees Bitcoin as a better store value than gold.
Despite its scarcity and skyward trajectory, there are still plenty of risks when it comes to investing in Bitcoin.
New buyers who bought Bitcoin now, I think it really it start to consume their life because they are not used to price fluctuation of something that, every 5 minutes the price changes. Unless you want to actively trade in it, if you just want to buy it to own some, buy it and just don't look at the price. Just, maybe open up, check it out every few months rather than just checking it every hour, because it can really drive you crazy.
It absolutely does remind me of 2017. One day this year we had a 17% pullback in one day. So I think when you get that very heightened intraday volatility, then that often is a sign of a top in the process of being formed. Now that doesn't mean we can't go to 40, 45, even maybe 50,000, right?
Another risk is that unlike gold and fiat currencies, there are questions over Bitcoin's usefulness as a store of value.
How do you value Bitcoin? It's really difficult. So, if we look at currencies or gold even, we have a long history of factors saying, okay, these are the different factors that you can look at to value gold or the euro or whatever the currency you're looking at. Whereas cryptocurrencies, because they're quite new, it's a lot harder for us to come up with a fundamental value. As with any currency, it really depends on the trust people have in that currency. And that can evaporate, even for typical currencies. In cryptocurrencies, probably the risks are higher than for normal currencies.
Because the technology itself is so powerful and the whole value of cryptocurrency may be Bitcoin. or other form of cryptocurrency should be way higher than a lot of other asset classes that exist right now. So that's from one bullish perspective. And another perspective is saying that there's really nothing backing it. The price is being pushed by the demand and supply, which could be gone in a few months' time. I think buyer of Bitcoin need to be aware that Bitcoin itself is not regulated, but the whole industry is being regulated.
But despite such uncertainty, investors like Yunheng say they're in it for the long run.
I like Bitcoin, firstly, other than scarcity, is that Bitcoin is extremely liquid. So as and when I want to buy or sell, it's extremely simple. My target price for Bitcoin is around 100,000 per coin, and I have a holding period of more than 10 years.
Experts say that more price volatility can be expected.
I think the consensus within the crypto ecosystem is that probably Bitcoin is likely to be between $50,000 to $100,000 by the end of the year.
I'd say probably by the end of the year, I would expect it to be lower than it is today, and potentially significantly lower. So in an allocation today, we're saying for gold, we'd say 3 to 5%. Given we think that's more of a mainstream asset class, generally we'd say the allocation to cryptocurrency should be significantly below that range. You should be comfortable with the risk that if it goes to zero, it's not going to devastate you financially. So if you want to play the currency or play the cryptocurrency area, nothing wrong with that per se, but just make sure you size it appropriately.